The Accunet Mortgage and Realty Show is sponsored by Accunet Mortgage, an equal housing lender, NMLS ID 255368, and Accunet Realty Advisors, which is a separate company from but still affiliated with Accunet Mortgage.
Welcome to the Accunet Mortgage and Realty Show, getting you inside information on buying, selling, and financing your home with expert advice from Accunet Mortgage and Realty's Brian Wickert on WTMJ.
All right, welcome to the Accunet Mortgage and Realty Show. I'm Brian Wickert, the president and majority owner of Accunet Mortgage and owner and the broker, the licensed broker at Accunet Realty Advisors. I'm joined this morning by the younger and taller David Wickert, who's our chief millennial loan consultant. I heard last week you said younger and more handsome.
I would hope.
That is in the eyes of the beholder.
Okay.
All right, but anyway, thanks for doing the show last week,
Of
David.
course.
If you got a question or comment, you can call or text us on the Accunet Mortgage Talk and text line, which is 414-799-1620. All right, well, this is a momentous day, not because it's the Sunday before Labor Day, but because it's the day on which we are once again reminded that the Trump administration is trimming back the footprint of the federal government in the world of mortgage lending. And David, what is happening effective today, September 1?
The number of folks who qualify for a WIDA loan, the Wisconsin Housing and Economic Development Authority, has shrunk.
Well, that's on Thursday. You're ahead of it.
Oh, today?
Today.
Okay, well, I thought you said this week.
No,
today, if those who would like to use an FHA mortgage, you used to be able to do a cash-out refinance, borrow against the equity in your home up to 85% of the value of your home. That has now been pared down to 80% of the value of your home.
That is now exactly the same as
Fannie Mae and Freddie Mac.
Fannie Mae and Freddie Mac. Yep.
Yeah.
So shrinking the footprint. Hey, you can't go quite so deep into your equity as you used to be able to on an FHA loan. So that was the only thing you could do for a first mortgage. Well, no longer as of today.
Right.
All right, you brought up the WIDA situation, and so WIDA stands for the Wisconsin Housing and Economic Development Authority.
Yep.
And on Thursday of this week, the maximum allowable income for the standard WIDA program is dropping from $94,645. That's how much.
How much?
Well, for a 1 to 2 person household.
Yeah. It was.
As if all the way through. No, this is for case files issued up until Wednesday.
Okay.
Okay, so hurry if you
right.
want to get in on the
Giddy
WIDA program and you make a decent, a larger amount of money. For 1 to 2 person households, it's $94,645 up until Wednesday at midnight.
Yeah.
And if you had a 3 or more person household, it was $111,105. That's
a lot of people.
That is a lot of people. Well, all of a sudden, if you wake up and you don't get started on your WIDA loan until Thursday, and this has to do with when we put your loan through the Fannie Mae automated underwriting system that WIDA uses. So it's the case file date on that run through the automated underwriting system. Well, it's dropping all the way down to $65,840.
That's $30,000.
That is a lot of people. It's a roughly 30 to 35% of all the WIDA customers that they served, so far this year
Are no longer
going to be eligible.
Well, they have the good problem of making too much money. It's just yesterday that was okay, and Thursday morning it's going to be.
But that's pretty radical.
harder.
And just a reminder as to why we like, and a lot of the world likes, the WIDA loan program. It allows folks to buy a home with literally 0% down, because the minimum down payment on a WIDA loan is 3%. But then WIDA will loan the home buyer the remaining 3%.
Sure.
So 97% is what we loan the value of the home on the first mortgage, but we can fill in with a WIDA second mortgage, fixed rate term at the same interest rate as the first mortgage. The only difference being that filler inner, what did they have a name for?
10 years. The WIDA Easy Second.
The Easy Close Second. That's what it was. That's a fixed rate loan over 10 years. So the number of people who qualify that is going to shrink dramatically as of Thursday.
Yeah.
And again, this is a result of Fannie Mae, just by the way, because WIDA actually sells their loans to Fannie Mae, even though you send your payments to WIDA. They are selling the underlying loan to Fannie Mae, and Fannie Mae is trying to shrink their footprint. Why? Because the Trump administration has appointed a new sheriff as of maybe like last March or February, a guy named
yes.
Mark Calabria. And so he is trying to shrink the footprint. Well, one way to do that is to say, let's reduce the loan amount, or I'm sorry, the income amount for which people are eligible under the special moderate income programs. When we come back, I'm going to tell you exactly what that means, because I just told you the two most recent things, which are FHA, cash out refinance is shrinking, WIDA, that income pool and eligibility is shrinking. Don't forget that earlier this summer, Fannie Mae and Freddie Mac, for their general all across the country moderate income program, shrank their income limits. I'll tell you exactly how much that has affected people when we come back. You're listening to the Accunet Mortgage and Realty Show on AM 620 WTMJ.
Getting you through the home buying process. Welcome back to the Accunet Mortgage and Realty Show with Brian Wickert on WTMJ.
So our natural human condition, I think, David, and you can push back on this, is that we assume tomorrow is going to be like today and yesterday. Do you agree or disagree?
Sure.
Okay. And so as such, we assume that, hey, the mortgage world is great yesterday, and it is the way it is and has been that way for quite some time. It'll be that way tomorrow.
Yeah.
Well, we've already mentioned two things that are showing that ain't the case, as the Trump administration in particular wants to shrink the footprint of the federal government in the world of mortgage lending. And so we know that this coming Thursday, WIDA's income limits are going way down. $65,840 is going to be the new limit. And we know that FHA, you can no longer borrow up to 85% of the value to take cash out. Now the limit's 80.
Well, and to your point on tomorrow not looking like today, the FHA thing, I mean, like, hi, I work in the mortgage business every day.
Yeah.
Came as a surprise to me. And maybe they had been talking about it, and
I don't think
just,
so.
Okay, so
I think they just woke up
30
and
days
said,
ago, they just said, we're going to change this.
Right. And so that's administrative without any,
Congressional
oversight. Well, so the other thing that happened, was it late June for Fannie Mae and like early July for Freddie Mac, the twin, government-sponsored enterprises, is they came out and they have for years had moderate income loan programs that were tied to the area median income, okay? And so that area median income for the special 30-year fixed rate financing, so what does that mean? Better pricing, meaning lower rates and closing costs, and cheaper mortgage insurance.
Yep.
If you have a credit score of at least 680 and down payment of 9% or less. Okay, those are the criteria for getting the super special pricing. So the income limit used to be $77,300 here in southeastern Wisconsin. And the cool thing about that is if you have two people in a household, and you can qualify just based on one income, we can still do that. But that dollar amount is now shrinking back down to the same one I just mentioned, which was $65,840. So,
which is only 80% of most area median incomes in Milwaukee.
Right, in southeastern Wisconsin. So here's exactly what that means. Let's say you're the lucky person or couple who earns $65,000.
Yeah.
Okay, so just under the new lower maximum.
As a total.
Yep. You could buy a $200,000 home if you have, I'm saying 680 credit, 5% down. Let's pretend the annual property taxes are $4,000. You can buy a $200,000 home and your monthly payment would be $1,410.
Okay.
And your loan cost, the cost of getting the loan, a mere $1,160 if you came to Accunet Mortgage. And the total money you need to buy, including the down payment, closing costs, setting up your tax escrows, and all that stuff would be $14,200.
Cool.
All right, so that's the lucky person that makes 66.
1410.
So through no fault of your own, you happen to have gotten a raise, and so the Smiths over here, they have 66,000, so just over the limit.
Yeah.
If they are buying a single-family home, their monthly payment is going to be $70 higher a month because instead of getting the 3.75 rate, they're going to get a 4.25 rate because their credit score is in the fourth best tier.
Yeah.
Right, 740, 727, yeah. They're in the fourth best tier. And get this, their closing costs are going to be double, another $1,140. So that's the penalty.
That's a lot of relief that you get.
Yeah, by having your income not be that high.
Wow.
Wait a minute, though. It gets even worse. If they're buying a condominium, because remember, Fannie Mae and Freddie Mac say that condo loans are more risky if you have less than 25% down. So now let's say this couple wants to buy 5% down.
On a condo.
On a condo, and they no longer qualify for this special moderate income program. Ooh, baby. Their rate is the same, so their payment is still $70 higher per month.
Yeah.
But now their loan costs are $2,600 higher.
Good
Than
times.
if they had qualified for the. So you see, folks, the federal government is trying to shrink by decree. So within the powers,
authority,
of the administration. So by fiat, because they have these things. Oh, wait, there's more. This week, David, the Trump administration is announcing their plan to reprivatize Fannie Mae and Freddie Mac. Let's talk about that and what that could mean after this next break. You're listening to the Accunet Mortgage and Realty Show on AM 620 WTMJ.
Helping you find a place to call home. This is the Accunet Mortgage and Realty Show with Brian Wickert on WTMJ.
Hey, we've got a text from Justin that we're going to get to after the news. A good question, Justin. Thanks for listening to the show, and we'll answer your question after the news break at the bottom of the hour. But let's just continue on this track of our natural assumption that tomorrow is going to be like today. I think the takeaway to this whole discussion that we're having here in the first half of the show, David, is if you're thinking about buying a home, sooner is better than later.
Yeah.
Because A, rates are really good, and B, the mortgage world may not be as friendly, next spring as it is this fall. Or who knows how fast these changes are coming, but we just have recited 3 big changes this summer.
Yeah.
That nobody, it wasn't telegraphed other than, Mark Calabria, the new sheriff at Fannie Mae and Freddie Mac, saying, hey, I want to shrink the role that these folks have. So this coming week, so just to say it plainly, right now, David and I and Gene Miller and Pat Cush, who I saw at a closing, a good repeat customer, was in on Friday, we all own Fannie Mae and Freddie Mac.
Yeah.
Okay. And just by the way, we, the United States taxpayers, earned a mere $25 billion of profit.
I got my check in the mail, didn't you?
It's called, we had to borrow less money on the national debt.
Ah.
And so there are 2 ways that the footprint of Fannie Mae and Freddie Mac can be shrunk, and that is Congress can pass legislation.
They do that?
Mm-hmm. Which I have read
from time to time
is in the fat chance category.
Got it.
Before the 2020 elections.
Yeah.
Right? Because, by the way, they were supposed to do it already.
Yeah.
We've only owned Fannie Mae and Freddie Mac for, it'll be 11 years this month.
Excellent.
Okay.
Happy anniversary to us.
And don't forget, we lost the $184 billion, right, by bailing them out, but then we've made all that back, and we are now in the black.
Yeah.
So, first of all, when's the last time that Congress could give up on $25 billion
the golden goose
of revenue coming in?
No.
That's going to be unlikely. But the other way is for the Fannie Mae and Freddie Mac's governing body, which is the Federal Housing Finance Authority, FHFA, and Mark Calabria is a really powerful guy. They can just change the rules.
Yes.
Right? So they've already done that by shrinking these income limits for the moderate income programs.
Yep.
All right. What else could they do, David?
Well, they could also change what kind of loans you could get.
And what do you think they might eliminate?
I think they're going to eliminate investment properties lickety-split.
And what about vacation homes? Why should the federal government help rich people buy vacation homes?
Or increase the minimum down payment on your second home. Right now, it's only 10% down. They could say,
Yeah.
you want to use a Fannie Mae Freddie Mac loan, 25% down on your second home.
That's right.
Overnight, without anyone's permission.
Yeah, they give us a little heads up, but it seems like they've been
30
giving
days?
us like 30 to 60 days before it's like, oh, and by the way,
Yeah.
we're changing the rule book. Okay, what other kind of a loan could they say we're not doing anymore or restricted further?
No cash out refinances.
Correct. That has been talked about. Hey, let's not let people tap the equity in their homes because we're here to help America buy homes,
Yeah.
not refinance
Not
them.
leverage their homes.
Yeah, not pull the cash out. So the world could look different in kind of a blink. And then the other thing that I thought of, can you think of anything else that they can do?
What do you have in
you wanna know
mind?
what I'm thinking?
Yeah.
Increase the fee that they charge
Oh, yeah.
for guaranteeing the loans. Because, folks, when we give you a loan for 3.75% on a 30-year fixed rate, The entity that collects your payment every month gets to keep about 1/4 of 1%. They pass along the 3.5% to Fannie Mae. And then Fannie Mae scrapes off between 1/2 of 1% and let's say 3/4%, depending on the risk profile of your loan. And that's the fee that they get for guaranteeing the timely payment of interest and eventual return of all principal to whichever investor somewhere around the globe bought the bundle of mortgages of which yours is a part. So they could just wake up and say, you know what? In order to make our kind of a loan, one that's guaranteed by Fannie, less attractive, and force you, Mr. Consumer, to look elsewhere. You know what? Instead of collecting 0.5%, let's make it a full percent.
Yeah.
And instantly, mortgage rates would go up by 0.5%.
Yeah.
Yeah. So by whatever amount the FHFA decides to increase their guarantee fee, would have an immediate impact on rates, despite whatever the Federal Reserve is doing, despite whatever money is flowing into America. If they just turn that one dial, which by the way, remember they did, at the behest of Congress in 2011. We're already paying, is it 0.1 or 0.2 more in the guarantee fee?
I don't remember.
Because Congress decided that would be a cool way to fund the
payroll tax
holiday.
The temporary payroll tax
holiday.
holiday.
Temporary payroll tax holiday. So we're still...
The moral of the story, if you're thinking about buying a house, do it now. Because you know what the world looks like.
Especially if you're looking to refinance an investment property, a second home, or take cash out.
Yeah.
And we're going to get a glimpse, by the way, as soon as this week, as to what might be on the chopping block from Mark Calabria. All right, we're coming up on the news. When we come back, I actually have a story to tell of a WIDA buyer whom we just closed and unfortunately would no longer qualify. So we'll cover that when we come back.
Expert advice on buying a home. Here's more of the Accunet Mortgage and Realty Show with Brian Wickert on WTMJ.
I am happy to say that David reminded me to get back to Justin's excellent text question, where he is asking us to comment on the differences between southeastern Wisconsin when it comes to the real estate market, being hot or cold, kind of a buyer's market or a seller's market, versus the more widely reported real estate markets on the coasts. And that reminds me of a comment my mother, my 89-year-old mother, 89-and-a-half-year-old mother, who was out here at the lake yesterday.
Not counting today.
That's not counting today, yeah. And she's like a month ago said, Brian, I just saw the news and it says it's really a buyer's market now. Is that helping you? Because she saw something on the NBC Nightly News saying it's a buyer's market. Well, the real estate markets have softened on the coasts. In fact, I didn't dig into this, but the FHFA home price index was only up 1%. Okay, in the last quarter.
So your Seattle home went from 700,000 to 707.
707, right.
Okay.
So nationwide, that's a big fat nationwide number. Yeah. And to Justin's point, all real estate, like politics, is local.
Yeah.
And so we are not experiencing that shift to a buyer's market where sellers are having trouble, selling and homes are languishing on the market. That is not the case here in southeastern Wisconsin, at least if you are in the what I call more affordable price ranges, which let's say that's under $500,000 and under. It's going to vary a little bit by community.
Mm-hmm.
All right, and so I just happened to look up while we were on the break, in anticipation of answering Justin's excellent question, that the percentage and number of listings year to date in the 5-county Milwaukee area, according to the Greater Milwaukee Association of Realtors, of which I'm a card-carrying member.
That's including Racine, but not Kenosha, correct?
That's correct, because Kenosha is part of the Chicago metropolitan area. So this year, through August, compared to 2 years ago, we are down 7.2%, which is 1,283 listings.
Single family and condo?
Nope, this is just single family. I didn't do condo. Okay. Didn't have time. So instead of 17,800 homes being listed for sale like we experienced in 2017.
Listed for sale with a real estate agent?
That is correct.
Okay.
Good point. And so that's the part we aren't able to easily measure is how many people are just throwing the sign in their front yard because the market is so hot.
Yeah.
Okay. And so instead of 17,800 listings, we are down to 16,500.
I stopped in at a closing. They found their house on Facebook. Somebody listed their house for sale.
Wow.
Yeah.
Okay.
Anyway.
Interesting. Now, so the listings are off compared to 2 years ago by 7.2%. Sales are only off by 4.5%, and that is similar to this year. If you compare this year versus 18, I should say. So compared to both 18 and 17, actual home sales are down 4.5%. And part of the problem is builders can't afford to build affordable homes, right? If you've got scarce labor, scarce lumber, scarce land is expensive in southeastern Wisconsin. People are surprised at that. You know, and you're going to go to the trouble of building a house and making money, which you make typically as a percentage of the sales price. Are you going to build a $250,000 home or a $750,000 home?
That one.
And so where we are seeing softness, though, and where it is still a buyer's market, is if you're in that $600,000, $800,000 price range, and your home is 15 years old, you are going to have trouble moving it. Yeah. Because likely the design of that home is a little outdated, right?
If you have wood colors in your kitchen cabinets,
Yeah, wood, unless it's something really cool like birch or maple or, hickory or something cool like that. But it's also the flow. People want open and they want outdoor living spaces in that price range.
Yeah.
And so there are plenty of homes that are languishing on the market because they have the formal dining room, they have the formal living room, the formal family room, and it's all chopped up. So good question, Justin. Thanks for listening and for calling into the show. All right, so I'll do... we have a show next week. Yeah, that's right, because the Green Bay team plays on Thursday, so we will have a show next Sunday. Whew. Am I doing that on my own? Or are you traveling?
I'm here.
Okay, great. We'll do that show together. The next week, then, you're doing it on your own.
Okay.
Anyway, so when we come back, I want to talk about a real-life example of a couple buying their first home, a duplex.
We talked about this. The story like 3 weeks ago.
Yes, we have talked about the story before. They have now closed. Woo. And we just want to outline two things, how they got led astray by the big national lender whose name rhymes with Schmicken, because they got this. They went and got
They got something.
They got their pre-approval online and blah, blah, blah. We'll tell you the rest of that story when we come back. You're listening to the Accunet Mortgage and Realty Show on Wisconsin's radio station, WTMJ.
Find a place to call home without the headache. This is the Accunet Mortgage and Realty Show with Brian Wickert on WTMJ.
All right, so when did this start? June. Got a call from a multi-time repeat customer introducing us to, let's call her Mary, not her real name.
Quite contrary.
Looking, she already had an accepted offer on a duplex on the east side, a very large and very nice duplex. Okay. And already had the accepted offer, and she had decided to go with the nation's largest lender because she believed all their advertising. You got this. Just, what do they say?
Click and pray.
Yeah, click and pray. Okay. And anyway, so got their pre-approval, wrote the offer, and then there were no real estate agents involved, and so didn't bother. She was so confident in her pre-approval from Schmicken that she didn't include a financing contingency. And then about 3 weeks into the process, the nice folks there at that company called her up and said, turns out we can't do your loan. And I think
not the way you want.
Well, right. And I think it was because having left it up to herself and them not doing a thorough job, they forgot that they needed to include the non-borrowing stay-at-home dads' debts in the analysis of whether they could afford the loan.
For sure. It's called marital property.
Yeah, on an FHA loan, which is what they were going for, you have to count the debts of your non-borrowing spouse in Wisconsin because we are a marital property.
Which kind of makes sense because there's still debts that you've got as a household.
Yeah,
but
we don't have to do that on a Fannie Mae loan,
well,
but you do
not
on an
yet.
FHA. So then their brilliant suggestion was, well, why don't you have one of your parents co-sign? Never mind that you have to then go from 3.5% down to 25% down.
Yeah, you got that money, right?
And this is like on a $400 and some $1,000 home. So just slap down another 100 G's. You got that, right? Oh, that's their slogan. You got this.
Yeah.
Anyway, so she was in trouble. right? I mean, it's like, the people that said I could get the loan and now I can't and I'm on the hook legally, what do I do?
Yeah.
So this nice person said, call the guys at Accunet. And I decided to connect her with one of our most meticulous, seasoned, friendly, thorough loan consultants that we have. I'm going to say he is.
Literally.
Mr. Jaime Suro. Been with us for a good long time, at least 15 years. And I said, you got to take a look at this because this is going to be threading the needle if we can get it done. And so then she recently closed and she wrote this nice review and posted it on Google. Thank you, Accunet, for getting a tough loan approval. A tough loan approved in a time crunch. We were bait and switched by a huge mortgage company.
Her words, not ours.
That's right. Who ultimately put us in an awful position 1 month from closing. A family friend put me in touch with Jaime at Accunet, and Jaime worked endlessly on our file to get the clear to close in about 1 month's time. We didn't even have to change our closing date. We are now in our dream home thanks to Jaime and Accunet. And boy, that makes a guy feel good.
Yeah.
Both Jaime. So I sent that review to Jaime and said, way to go, Jaime. And I copied the borrower, Mary, not her real name. And I said, yeah, that Jaime's a real rock star and blah, blah, blah. And so then Jaime called to thank her for the review, and he said, hey, I'm way too old to be a rock star.
That's not true. Paul McCartney's like 74.
Yeah, he's 10 years older than Jaime.
That's fine.
And she said, well, you may not be a rock star, Jaime, but you are a magician because you made me forget all about the guys with the rocket. Isn't that nice?
That's awesome.
And so it turned out we really had to do some smart work on their loan. We did put them into WIDA.
Yeah.
And part of this was WIDA has an option where you don't have to pay for private mortgage insurance.
Oh.
For which they would not have qualified, just by the way.
When the world changes on Thursday.
Well, but I'm just saying, even back a month ago,
Yeah.
had we tried to get mortgage insurance, she would not have qualified.
Oh.
Because we were using too much of her income to qualify. It was
Anyway.
tight. Anyway, bottom line is we got the deal done, and they are in their house, and it pays to go local. But as David said, they would no longer qualify for that mortgage. Had they waited until the fall,
Yeah.
they would not be able to buy that home. So because they got it done before the WIDA income limit shrank, they're in their home and probably barbecuing out this weekend.
It's true. And proving not for the last time that the details matter.
Yeah.
Yeah.
And you're better off with the smaller local guys.
The
we
granular,
like to think.
detail-oriented local
Let's talk
cats.
about rocks. When we come back, let's talk about why it is still a great time to get a rock solid pre-approval.
Yep.
Because home buying season is extended. Let's also talk about where rates are because they are fantastic. We'll cover that when we come back. You're listening to the Accunet Mortgage and Realty Show on AM 620 WTMJ.
Getting you into the home of your dreams. Here's more of the Accunet Mortgage and Realty Show with Brian Wickert on WTMJ.
Well, and you just heard me earlier on the pre-recorded pitch say, you know what, click on the blue button for rock solid guaranteed pre-approval. And boy, I really wish you would, because I think the competitive home buying season is going to overlap with the start of the NFL here. And this fall, it's going to be still very competitive. And you're better off doing it right. I recorded. Well, go ahead.
I was just going to say, everybody in the Wickert family has bought their house in like winter. So
Yeah, winter,
in case
fall.
you're dying to know.
Yeah, we're trendsetters there.
Yeah.
But I was working with somebody this week, again, a multi-time past customer on a complicated transaction because he owns 2 homes now and wants to buy. He's doing the Becky and Brian maneuver. He owns a lake home and a regular home in the burbs, and they want to consolidate to one lake home.
Okay.
And so that's a bit of a puzzle. Are we going to use a bridge loan and take equity out of one of his houses? Or, is he going to take a life insurance loan on his life insurance?
Oh.
So, and not everybody's situation is that complicated. But let me just say that taking care of the income and down payment, game plan, and documentation before you write the offer is just a huge stress reliever.
Yeah.
Once you get your home under contract, you are on the clock, and that's not the time when you want to be, gathering
solving.
together. Yeah, exactly. Let's get that all out. Let's come up with the game plan that is easiest to execute when it comes to where's the down payment going to come from. Let's think it through ahead of time.
Yeah. And then, as I have said to folks over the phone, then you get to focus on the things that you actually care about. The mortgage is a good thing to have figured out, but really what you're trying to decide when you're walking through a house is, do I like this kitchen? Do I want to have Christmas with my family at this house? It's already an emotional, you have to fall in love rather quickly in order to go, write an offer on a house and decide, you know what, I would like to wake up here every morning.
Correct.
So let's to reduce the stress.
And then the other really, really important thing is by having us back up your offer with that rock-solid, guaranteed, fully verified pre-approval, that says to you, hey, if we goofed up, we'll give you $1,000. That reduces stress because you're going to have shelled out appraisal fee and a home inspection, right? And then if we go like the guys with the rocket did for our previous example story, like, oh, geez, can't help you.
Sorry.
You're already out $1,000, so we're covering that, reducing stress. But then we're also telling the seller, Mr. Seller, we have fully vetted Mr. and Ms. Homebuyer here, and you can rely on this pre-approval letter. And, because if we made a mistake, we're going to write you, the seller, a check for $1,000. Nobody else does that. Your typical flimsy bank pre-approval, if you, listing agent or seller, actually takes time to read it, says something like this: we checked your credit.
And we believe you.
And based on the information you gave us about your employment and income and down payment that we did not verify, you're pre-approved. And by the way, this pre-approval is subject to us actually verifying your income and down payment, which is where all the problems lie. Usually the credit's the credit.
Credit comes back in a nanosecond.
Yeah, it's the other stuff that's important. All right, so let us, please, if you know somebody, if you are thinking of buying a home this fall, let Accunet Mortgage be on your team. You will be glad you did. Where are rates right now, David?
So on a 30-year fixed with 25% equity and all the other right stuff, including a 740 credit score and escrowing for taxes, Accunet could swing 3.625% with just regular closing costs of $1,100. APR is 3.66. If you're me and you like when other people pay for things, as always, you could do 3.75%, and that would just be with $495 in loan costs.
Okay.
APR is 3.79.
So the message there is rates are low. The factories around America called mortgage lenders are full. So we're still getting purchase loans done on time, but you're going to have to wait a little while on a refi because there are a lot of people saving money for living in the same house. Freddie Mac still says that just about everybody who got a loan in 2018, in the 4.5 and above club.
That's $2 trillion worth of money, by the way.
Could benefit by refinancing. And yet it's still amazing to me. I talked to a few people who go, well, I think I'm going to wait because, the Federal Reserve, I heard, is going to cut rates. Yeah, you know what? There's 100% chance that the Federal Reserve is going to cut rates.
I looked. It's 97, not to...
What? No, it was 97 for the quarter.
I know. I looked right now.
And isn't the other part for a half, or is there some part?
The other part is to stay the same.
Oh, stay the same. Okay.
Anyway.
So they might stay
97%.
All right,
pretty
97.
high.
That's already baked into today's rates. And the real thing that's got today's rates as low as they are is the Trump administration's trade war with China. And you reminded me that a bunch of trade tariffs went into effect today.
$111 billion worth today.
Yeah. So if all of a sudden we strike a deal or come closer, which is why the stock market rallied this past week.
Not just strike a deal, but
even pretend.
Say
footsie.
We're playing footsie about a deal.
Yeah, it looks a lot better than it did before.
Yeah.
That is likely going to push mortgage rates back up the other way.
Well, they've dropped so precipitously, they're going to swing back the other way.
Maybe.
Just as hard.
We can't really predict the future, but why not take the bird in the hand? People come up with a lot of excuses, just like they did in that furnace commercial, not to get their furnace fixed. People come up with excuses. It's going to take too much.
Are you going to talk to those people who said I can't talk to you until September? It's September now, by the way.
Oh, I think we already did.
Okay.
I think we locked in the rate and we're going. I'm not sure. I convinced them because I said, I think I showed them how the interest savings that they were going to do was like $25,000. And so I kind of snarkily said,
do you have 10 minutes to save $25,000?
Well, yeah. It's like, I don't know if you really want to leave that on the table. Maybe we can get this going.
Yeah.
And so I think they did.
That's
So
good.
don't make excuses. We can take care of everything over the phone and online. We'll even send the closing agent to your home or office to do the closing on a refinance.
Yeah.
We can't make it any easier. All right, that's all the time we have for today. If you want to get started with your very own, no hassle, no Social Security number required refi checkup, guess where you can click on the blue button. If you want to get started with a rock-solid guaranteed pre-approval to buy here this Labor Day weekend, please click on the blue button, and then you'll get connected with one of our licensed, friendly, and knowledgeable loan consultants next week to get the job done. Thanks for listening. You've been listening to the Accunet Mortgage and Realty Show on AM 620 WTMJ.
The proceeding was a paid program. Advice and opinions expressed during the Accunet Mortgage and Realty Show are solely that of the hosts or guests of Accunet Mortgage and Accunet Realty Advisors, and not WTMJ Radio or Good Karma Brands Milwaukee, LLC.